After the longest bull market in US history, it's hard to find good deals, good investment opportunities. Although there are two dividend stocks that I might buy soon. Investors have beaten down these companies' valuations. Their shares are more than 35% and 46% below their highs, respectively. But fear is likely overblown. Both of these companies have a very long history of rewarding shareholders. One has paid and raised its dividend for over 36 consecutive years, and the other company comes in at 46 years. This makes them both elite dividend aristocrats, and there's a high probability they'll both be able to continue paying bigger dividends each year. So let's go ahead and take a closer look at, drumroll please, Exxon Mobil and Walgreen Boots Alliance. But before we dive in, I'd really appreciate it if you tap the like button down below as well as subscribe to my channel. That way you'll get the most up-to-date research that I put out. The number one company on my watch list is Exxon Mobil, and it's an integrated oil company. At every stage of production, refinement, and further processing, Exxon makes money. This setup and its global network have helped the company collect a steady stream of income. Now, one big fear is that fossil fuels are on their way out. And I have no doubt that renewables will end up taking over. That'll be a positive change for our world, but it's going to take many decades for that to happen. Along the way, Exxon will continue to have healthy cash flows, and that's great for investors. Now, over the last 5 years, it's been tough for oil producers. WTI crude prices have dropped from over $100 per barrel to closer to about $50 today. As a result, profitability has decreased. Although ExxonMobil has a stronger balance sheet than the other super major oil companies. And a fun fact, ExxonMobil had a higher credit rating than the US government. But after a downgrade in 2016, it now has the same AA+ rating as the federal government. With a sustained drop in oil prices, there's been better buying opportunities as smaller producers have struggled. This consolidation, often forced, is good for the big players, and Exxon is focusing on higher margin projects. So even if oil drops to $40 a barrel, Exxon can still see strong cash flow growth, and this will help support paying a bigger dividend each year. With a drop in share price, the dividend yield has climbed to about 5.5% today. And its other valuation metrics are looking more enticing. So if and when I pull the trigger to buy, you'll find more detailed analysis on my YouTube channel as well as my blog. The second company on my watch list to buy is Walgreen Boots Alliance. The company is the largest drugstore chain in the US, and as the population ages, more Americans will visit its network of over 9,200 stores. Now, what's caused the price to drop? There are two main drivers in my mind. One is regulatory, and the second is competitor fears. And although healthcare costs have skyrocketed, profit margins remain thin for Walgreen Boots Alliance. But new policy changes might put even more pressure on profitability. And on the competitor side, Amazon bought PillPack, an online pharmacy business. Amazon and other companies are maybe starting to take a bigger bite of pharmacy sales. That's potential negative for Walgreens. These fears have helped knock off more than $50 billion from Walgreens' market cap since 2015. But is the company really worth half of what it was back then? It's dropped from about $100 billion to $50 billion today. Sure, there are new challenges ahead, but Walgreens has a long history of adapting. Today's fears are likely overblown, and as a result, the dividend yield now tops 3.5%. Some of the other metrics are also looking more attractive. If I do end up buying shares, you'll find more detailed write-up likely on my YouTube channel and definitely on my blog. Now, these are the two companies that are on the top of my dividend stocks watch list. And it's always important to consider with any investment comes risk, but also the potential reward might justify the risk. So if the share prices drop further, I'll have a wider margin of safety. I monitor hundreds of dividend paying stocks each year, although I don't have time to do a deep dive on every company. I have a full-time job like you, most likely. But what dividend stocks are on the top of your watch list? What are you considering buying recently? And please share them in the comments below, as well as any other thoughts. I appreciate any feedback, and once again, I'd really appreciate it if you tap the like button down below, as well as subscribe to my channel. If I end up pulling the trigger and buying one of these companies and you're subscribed, you'll be one of the first people to know.